Hi guys, it's Brandy again. Thank you for tuning into this training. Again, on behalf of Dr. Spiller, Mrs. Teresa Spiller, the admin group, thank you for allowing us to help facilitate your learning. Thank you for partnering with the Forex family in conjunction with Global Trade Academy and our Project 2020 initiative. In this video, it's going to be super quick. I'm going to show you guys how to properly prepare for a break of structure trade. I am going to show you what the signals look like in the signals group. I'm going to go over the little trade setup alert that we give you guys. I'm going to kind of read and point out some things for you. I'm going to show you how to mark your chart in preparation for a break of structure trade, and then I will let you guys go. So first, let's go ahead and share my chart. All right, so you guys should see my chart now. It's a blank chart. All I really have on there is my supply and demand zone. Nothing major happening. I was looking at some naked charting a bit earlier. Let me get let me see what pair I want to use for my example. Let's do Euro AUD. All right, so we're going to Euro AUD over. I am going to share my my Telegram screen really quick, because the first thing I'm going to do is go over this paragraph that we give you guys when we send out the trade setups, okay? So let me get that together really quick to share. Okay, so you guys should see my Telegram chat for the Global Trade Academy Signals and Education group. Right here, you'll see the paragraph that we put up when we are putting out these break of structure signals. We're all adults. I know we all can read, but I'll go ahead and read it to you. Trade setup alert, please note, these trades are taken from the 1 hour chart. That means that that is the chart, that is the time frame that Dr. Spiller has done his analysis from, okay? We recommend that you set your stop loss for regular Forex pairs. That's pretty much everything but gold, for 30 to 40 pips from your entry point. And then for your GBP pairs and your gold pairs, we recommend that you set it 40 to 50 pips away from entry. The reason why we recommend two different number ranges is because, like, your GBP pairs, your Euro pairs, your gold pairs, they make really big moves. So what may just be a minor retracement on gold, because you had such a tight stop loss, it will kick you out in a loss instead of letting you gain the profit once the trade moves in the direction that the analysis suggests. Some of us, we don't necessarily set a stop loss. We kind of keep an eye on that stop loss area. So what you can do, you can drop a line on your chart where your stop loss would be, and you can kind of eyeball it, you know, throughout the day, just to see if it's getting close to your no zone. For the more volatile pairs, your GBPs, your Euros, your golds, please, please, please use lower lot sizes, okay? They make bigger moves, so just like you can earn more money on that trade, you can lose more money on that trade. And you know, our number one goal is to protect your account. Now with that, if a trade goes into profit, Dr. Spiller's rule for taking profit: you should never leave a trade negative if it goes into profit. If a trade goes 10 pips into profit, oh, you guys can hear my stop loss kicking in, my trailing stop. That's what that little squeak is. So hopefully it keeps on squeaking. But anyway, back to what I was saying. If a trade goes 10 pips into profit, you should not leave that trade with less than 5 pips. You should at bare minimum move your stop loss to entry, okay? If a trade goes positive, again, you should not leave that trade in a negative position. Now, what does break of structure mean? It means to only take the trade when a candle closes above or below, depending on if you're in a buy or sell, the suggested price level, okay? Only when the candle closes, not when the candle touches, not when the candle passes it up, but then it retraces. You have to wait for the candle to close above or below the suggested level. Please, please, please hear me on that point, guys. Let the candle close above or below the suggested level, okay? Trading is a game of patience. It's a waiting game. So wait for the optimal conditions. All right, guys? All right. And then, of course, we have our risk warning here. Your capital may be at risk. Our signals are for educational purposes only, and they are not to be considered investment advice. Please, guys, do not risk more money than you can afford to lose. Be vigilant about your account. Please, 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 guys, do not trade money that you cannot afford to lose, okay? Okay, so now let's look at what the actual signals look like, okay? So this is what a signal looks like. We have the pair, we have whether it's a buy or a sell, and then we have the suggested price point that we should be looking for the candle to break and close above and below, okay? And it's really that simple. You find this price on your chart, you mark it, and you wait. That's all you do with the break of structure trades. Let me go down because I am looking at an old signal set. I want the newer ones. Here we go. Let's keep scrolling a little bit. We had some signals yesterday. So that's the ones that I am trying to find. So give me a minute. Okay, here we go. Let me pull up this picture one more time. We added some points to the bottom of it. If a pair has G6 next to it, that means apply the G6 strategy to that pair and enter the trade as a market execution once G6 sets up. If we put an RT, we're letting you know it's a retracement trade. If we put a CT, we're letting you know it's a continuation trade. It's just us trying to give you more information so you can make more informed decisions on if you want to trade a particular pair, okay? Perfect. So, all right, we said we were gonna do Euro AUD. So the price point for Euro AUD was 1.71444. I'm going to switch back over to my MetaTrader 4 screen, and we're gonna mark that price point on our chart. So what you do, once you have your chart up, right here in your top menu bar, you see the arrow, you see the crosshairs, there's a vertical line, and then there's the horizontal line. You want to left click the horizontal line, and you want to drop it anywhere on your chart. It does not matter where. We're gonna change the parameters manually, okay? Once you drop the line, you want to double click the lines until you see this little box that shows up. Let me grab a little arrow so I can point the box out to you guys. You want to double click the line so that that little box right there shows up. And there's one on the other side as well. Hopefully you can see that. I'm gonna double click it again so that you can see those boxes will disappear if I double click again. What double clicking that line does, it opens it up so that you can modify it. It's only able, you can only modify it when you have these boxes on the side. So you double click it, you get that box, okay? Once you get the box, you now right click the line and you go to horizontal line properties. Under parameters, you'll see a space that says value. Under value, you want to type in that number that Dr. Spiller suggests for the break of structure trade. Again, that number was 1.71444. And then you hit OK. All right, guys, so that moved our line to the level that Dr. Spiller suggested for our break of structure trade. Let me go ahead and clear off these arrows really quick. Perfect. Make sure I'm on the 1 hour chart. Yes, I'm on the 1 hour chart. We have our line set up. So we are waiting for price to reach this line in a buy. We want a candle to literally cross that line. Once it crosses that line, we want that candle to close above it. So we want to see a candle break the line, and please excuse my kindergarten art. This was not your girl's chosen path in life. We want a candle to break this line, right? Preferably a flat bottom candle, because if it's a flat bottom candle, we know we're moving in momentum. So once this candle breaks the line, on the second candle, after this candle closes at the end of the hour, when the new hour comes, another candle pops up, right? This is the candle that you should be entering the trade on, this candle right here. This is the break candle. I'm gonna put BC by it. That's the break candle. This is the trade candle, TC, right? You only enter the trade after a candle has broken the line and closed above it or below it, above for a buy, below for a sell. So I'm going to show you an example of when you don't want to get in a trade, right? So we're going to pretend with some numbers here. I'm going to make my screen a little bigger so you guys can actually see the candles. So right here, let's pretend that this was the break of structure level that Dr. Spiller set. I'm going to drop a horizontal line so that you guys can see the exact area that I am looking in, and I'm going to spread my candles out a little bit to make the chart a little bit clearer. Perfect. So let me move this line up a little bit now that we can see it a little better. All right. So we're looking right over here. So let's pretend this is the price point that Dr. Spiller suggested in the break of structure trade. Here we have a candle that approached the line and it touched the line. This is not when you get in, okay? This is a no-go. This is a do not enter zone. It's a continue to watch the trade zone because something may be happening soon, but you do not want to get in the trade yet. This is not the candle you want to enter on. So then look, you have this candle right here. This candle actually broke. This broke the line. But look what happened. It wicked. It rejected the line. Now, some of you are risky and you take, you make not so smart decisions when it comes to entering trades. And you would have seen that this candle broke that line and you would have gotten that trade. and you would have been negative 51 pips. You would have hit the suggested stop loss because you were impatient and you did not wait. But look what happens if you would have waited until this candle. Look what happened if you would have waited until right here, until that candle, where you actually had a clear break and the body of the candle, the solid part of the candle, closed above the line. If you would have waited for that to happen and you would have entered on the next candle, okay, you would have picked up over 208 pips in a 15-hour time span. If you would have had your trailing stop on, you would have still picked up 110 pips just by being patient versus getting in the trade too soon and losing 51 pips. And that is literally all you do, guys. Like, the video is over. The training for the break of structure trade is over. That is it. You drop the line, you input the parameters, and you wait. You don't have to watch the chart all day. You just go back, you go back every hour and you check to see, has price broken? You know, maybe go back at maybe the 57 mark on the hour. So like if it's about to be 10 o'clock, you check your chart at 9:57 and just watch to see what that candle is gonna do and if it's close to your line. And before you even start watching the candles, you can download a price alert app of your choosing. There are several. You can download a price alert app and you can wait until you get those alerts to actually go to check your chart, because it doesn't make sense to check the chart all day when price isn't even close to your line. But if you use one of those price alert apps, when it alerts you to price, then you can kind of zero in, okay, it's time for me to start paying attention to this particular chart. I suggest you set price alerts on every single pair. That way you don't miss any of the action. Hopefully this video is helpful. Replay it over and over again until you can grasp the concept of what you need to be doing when we post these break of structure trades, when we post these signals, right? Again, you get the signal sheet, you click on your pair, you find your horizontal line, you input the correct parameters to that line, you get your favorite price alert app, you set your price alerts, and you wait. You sit on your hands until the candle breaks and closes above or below the suggested price point. Okay, guys? Another thing, another rule of thumb, I should have said it before I even showed you guys how to do the break of structure. You want to check the news every single day before you start trading. Make sure you check the news every single day before you start trading. You need to know which pairs have red folder news. And if the pair has red folder news, you don't trade it, regardless of whether or not Dr. Spiller has given us a signal on it, okay? Let's be clear on that. We do not trade when a pair has red folder news. We do not trade on red folder news pairs. I don't know how else to say that, but hear me. Protect your account. News can go drastically in the wrong direction against your trade. Do not trade on red folder news pairs. So with that, again, guys, thank you for tuning in. I hope these little short series videos that I am going to be periodically posting is helpful. I'm trying to streamline things so you don't have to sit for an hour and watch a video. You can get it in 10 or 15 minutes and just replay it as needed. With that, guys, thank you again. Thank you. Thank you. Watch these videos as many times as you need to. As always, protect this house, guys. You know, we have a treasure. It's our duty to keep it sacred. You know what I mean? Again, thank you and see you on the next video.